Okay guys, today we are going to be talking about the order block, its importance and how to apply it properly on the chart to make good profit. So guys, without wasting time, let's move straight to the chart. Okay, as you can see here, why is order block important? Order block are important because they show where the strongest players in the market institution place their orders. Since these players move billions, their footprints become valuable zones for traders. How to spot valid order blocks? Number one to note, the trend. Trend matters. Is it an uptrend or a downtrend? 2. Check out the last candlestick before the accumulation or the last candlestick before the impulsive move. 3. Break of structure. Make sure that there is a break of structure make sure that there's a break of structure there. Number 4, check out for the imbalance. Make sure that within the impulsive move there is a fair value gap or imbalance that will serve like that magnet that will pull the market back to tap into your entry before dishing out the profit. Number 5, make sure there is liquidity. Now, before this market retracing to this level, it will consolidate somewhere around here before clearing back to dish the profit at last. The same thing apply for a downtrend. It is a downtrend, pointing out our number 1. 2, the last candlestick before the last impulsive move, just like we have here. When you point it out, make sure that there is a break of structure, just like we have here. At this point, the break of structure was here. This way, I'll just clone this. This way, the break of structure is this way. You have a break of structure there. When you point out the break of structure, check out for the imbalance. That imbalance refers to the fair value gap within this impulsive move towards the downside. Check out for the imbalance right there. Make sure it is close to your order block. Now, when you've done that, watch out for liquidity. Liquidity will play out somewhere around here, clear back into your order block before dishing out the profit. So, in an illustration, this is what happens before we pick an entry so that the market dish us the profit that we are expecting. Now, price often react when it returns to an order block, making them strong areas for entries, just like I said here. For stop loss, just like it will be placed on live chart, and take profit target. So let's move to live chart to experience what I am talking about. Let me just copy this. Now we have our chart there. We are on the daily time frame on the gold USD pair, as you can see there. And the market, after a long consolidating period, has decided to pick an uptrend, as we can see this impulsive move here. Now, we are day traders, so we are moving slowly, or let me put it gradually, to our entry time frame. So next we go to the 4 hours time frame From the 4 hours time frame here, you can confirm the uptrend as well from the 4 hours time frame. The market is trending towards the upside. Now let's move to a lower time frame. Let's go to the 2 hours time frame. From the 2 hours time frame, you can watch the uptrend as well. Let's go to the 45 minutes time frame. This is actually what you do in order not to miss the trend direction. From the 45 minutes time frame, we have a break of structure there. I actually love to mark out my break of structure from the 45 minutes time frame, especially the last one, from which I'll pick an entry. It just has a way of giving me that visibility when I finally move to the 15 minutes time frame, which is my entry time frame. Okay, as you will see there, as you can watch it there, this is the break of structure. Let me just paste this here so that you continue to see what we were explaining in the illustration earlier. Point out the trend. We have confirmed that it's an uptrend. Yeah. When you point out the trend, the next thing to do is mark out the last candlestick before the accumulation. This is the accumulation here, or the impulsive movement. The last candlestick is this. Once I've marked that out, that candlestick out, I'll need, okay, once you mark it out, the next thing you will need to check is the break of structure, which I have right here, BOS. But I'll have to retrace it a little bit because I marked it out from the 45 minutes time frame. On the 15 minutes time frame, there is a slight change bringing us to this level. Good. Now once I mark out that break of structure as it is seen here, the next thing to do is the imbalance. And right here the market has started creating the imbalance before they clear towards the downside. So we are on the live chart. Remember, once you've done that, no, I mean, this is not imbalance. This is liquidity. Watch out for imbalance. The imbalance is our fair value gap, which is visible at this level. Let me point it out for you. Fair value gap, which is visible at this level. As you can see right there. Once you point out the imbalance, watch for the liquidity, which is playing out already. Let's wish that the market clear liquidity into our order block before dishing out the profit we are expecting. Okay. This is what we are expecting the market to do. That's what we're expecting the market to do. Okay, as you can see, This is the case for an uptrend. Point out the break of structure. Mark out the trend, point out the break of structure, mark out the order block, point out the imbalance of the fair value gap within the impulsive move, watch for the liquidity and the clearance into your order block before the impulsive move. From there we can place our order at this level, give it some breathing space, or place my order at this support level, and my take profit target will be at this level. For the second, my first take profit target will be at this level. So my first take profit target will be at this level. Good, just like that. First take profit and the second. So guys, this is a live chart. I'm taking this trade. I'm waiting for it at this level for the profit. Now, okay guys, now let's check the downtrend from the USD Canadian dollar pair. You see that on the USD Canadian dollar pair, the market is trending towards the downside. Just like we did for the uptrend, let's gradually move to our entry time frame by going to the 4 hours time frame. From the 4 hours time frame, you will still notice a break of structure there towards the downside, but the market is still to retest this level, still to break below the support. Okay, let's move to the 2 hours time frame. From the 2 hours time frame, you will notice an uptrend from here to here, and then from here there is a change of character. Here we are looking at this downtrend. So let's go to the 45 minutes time frame. From the 45 minutes time frame, we have the market trending towards the downside, and just like I said, I like marking out my break of structure from the 45 minutes time frame, as you can see right there. We have break of structure there, and we have the second one at this level. You have the second one at this point. Okay, just a reminder so that we have an idea of what we were doing, just like it was when we were illustrating. Point out the trend, make sure that it's a downtrend as we have it there. Then the last candle before the impulsive move. The impulsive move in this case is this. Let me bring this down. The impulsive move in this case is this. Now, when you point out the last candle before the impulsive move, which is this, which is this candle. Yeah, which is this candle. The next thing to do is the break of structure. It is already there. Then check out for the imbalance, and in this case there is no imbalance. There is no imbalance. You see that there is no imbalance here. Now let's watch to see okay, we have another break of structure here. We have another break of structure here. This is a break of structure. We have a break of structure there. The last candle before the impulsive move for this particular break of structure is this candle here. I'll call it my order block. Now when you mark out the last candle, which is the point 2, point 3, the break of structure, which is already there, point 4, the imbalance, we have the imbalance at this point. And remember I said imbalance is what sells FVG. Imbalance or fair value gap is what serves as that magnet that will pull the market back into our order block before dishing us the profit. So let me cover the candle well. We have it there. Now once you've done that, let me just remove this because it is not valid. Once you've pointed out that, you wait for the market to play out. It is creating liquidity at this point to clear back so that it dish us the profit that we are expecting. This is what we are expecting the market to do. That is what we are expecting the market to do. So it's a short, and our point of entry will be here. Just shoot this in. Always give your stop loss breathing space. Don't come and put it directly here. If not, the market might clear liquidity and push you out before the impulsive move. So just always leave gap, a sort of breathing space, and our TP will be at this point. So let me remove this. That is what we have, and that is what we are expecting the market to do. But for this trade, I think that no, it's okay. It's okay. That is what we have. Let me go to the 15 minutes time frame. You know, I actually thought that I am doing this from the 15 minutes time frame, but I think everything is intact. Everything is still okay on the 15 minutes time frame. Yeah, that is what we are expecting the market to do. As you have it there. Okay guys, this is basically what you do, or what we have been doing to come out with a successful trade that you've watched so far. So if you've watched this video to this moment, please remember to subscribe, like, share, and especially hit the notification bell so that whenever I release a video like this, you shall be the first to be notified. Thank you.